Hello, fellow traders. This is TheRumpledOne coming to you on Tuesday, May the 14th. The year is 2024. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, you made some money off of that news release about, what, an hour ago?
I did. I didn't make it off of the initial release. I made it off the way I always recommend for people to do it, and that is to wait for the news release to occur, and then wait and see what the reaction to the news is. What do I mean by that? When the news drops, it's going to make some type of impetuous move. Sort of like an impetuous child, you know. It's going to move radically in one direction or the other direction, or both directions, and you don't know what it's doing for that first minute or two or whatever. And it will just, you know, it's there to entice you to jump in and take your money away. That's what it's done to me in the past. So that's why I don't do that anymore. I just say, I'm going to wait. But because what will happen is more times than not, you'll go and move in any particular direction. In this particular time, it ran down like 35 pips. And then you just wait, and you wait, and you wait. And then you wait for a signal, because more times than not, it's going to go back up to the open, and sometimes even past wherever that open was. You know, does it happen every time? No, it does not. But more times than not, it does. And what keeps you safe is you go and wait for your signal. So you're trading like you normally would in any other event. You know, you're just going and waiting for the signal to come in. And I happen to get very, very lucky, you know, today, because what happened was it went and it ran all the way down, and I waited for my signal, and I got a signal, and I jumped in, and it ran up a little bit, and then it came right back down, went back down to pretty close to where my first trade was, and it put in another signal to go back long again, and I jumped in a second time. I had enough gunpowder, you know, in the keg to go and do it, so I did it, and by the time I was done, I walked away with somewhere around 35 pips between the two trades, which is not a bad day to start the day. That's for sure. But you know, so I've got 3 trades today and doing exceedingly well, mainly because of having the patience. And that's the thing. It's patience. You know, we're sitting here and we got to go and just have patience. And we were just talking, Zero, about this whole idea of, you know, pattern recognition. You gotta sit there and you wait for your patterns to come up. You wait for these things that give you a clue as to what you've observed the market to do in the past. Does it do it every time? It does not. And because it doesn't, we have a pattern of going and doing what? Preserving our capital through risk management. That's our pattern. The market's pattern is to move in certain ways. Our pattern is to go and preserve our capital by managing our risk. You know, and if we both go and do that, we'll all make money. And that's what we have to do.
Yeah, it's kind of funny that, you know, you talk about the patterns, because when, you know, before we were making the video, we were looking at the charts, and I said, yeah, it needs to break the previous day's high at 68, and then it did for a couple of pips, came back down and reversed up and put in a new high for the day. And that's just, you know, once again from observation. And then, you know,
Right.
having a bias when I'm looking at the multimeters, if I see a bunch of green, it probably, going shorts, probably better be a scalp at best.
Yeah, I mean, yeah, like right now. I mean, there's not. Yeah, I've got the buttons indicator on the chart. You know, where M1 is red now, just turned red. But everything else on the entire chart is green. There's just a sea of green here, and it's like, you want to go short? You know, come here, let me slap you. Maybe that'll help you out a little bit. You know, right now it's just not the place to be going short on. You know, now again, like you said, there are going to be people who gonna and can make money on it, because they they can scalp, and they're only looking to make a half a pip or a pip, and if you're quick, and you observe those patterns quickly, you're able to get in and out. You happen to have a broker that's actually very good in the sense of going and accepting your trades and very quickly. You can certainly make money. There's no question about it. The thing is that more times than not, we don't have enough. We either don't have enough bandwidth to do it, in terms of our computer connection, or not enough bandwidth between our 2 ears to be able to recognize and execute. Either one of those bandwidths falls short, we're in trouble.
Right.
But and that's why, okay, we got a sea of green here. Let's go the other way, and figure it out. So now here's something that to keep in mind. We're about to drop a new 5-minute candle. We're about to drop a new 15-minute candle. So knowing that everything we've been observing goes away, and everything can go from a sea of green to a sea of red in a matter of one tick or 1 second, just because of that. So you got to remember that you got to constantly be paying attention as to what's going on, and don't get glued in. And what I mean by getting glued in was like, well, today is a day of green, so nothing's green. No, you got to be constantly looking to be seeing what, has something changed that goes and changes my bias, changes the way that I'm looking at the market, and paying attention to that, on a regular basis. However, I like to look at it every 5-minute candle. I like to go and reassess where we're at, because that's more than enough. I don't need to go and do it more often than that. If I do it every 5-minute candle, I'll have a pretty good understanding of what's going on. And correct me if I'm wrong, Hero. I can't remember the name of the indicator, but you had an indicator that gave you basically, what the bias was for a particular indicator, or not indicator, but instrument is based against all the other instruments that are out there. I forget what you used to call that, but we used to look at it a lot. And it just told you the order of, okay, right now the pound is the strongest, so the dollar is.
Are you talking about the strength chart?
Yes, the strength chart. And that I think the reason why I bring that up is because I think that's a really good indicator for people who are just trying to learn how to go and figure out what their bias is in the market. It'll give you an indication of how strong a particular currency is. Not a pair, but a currency.
Right.
And it'll give you an idea. So you can go and say, hey, the market's saying this based on what the market's actually doing. Yeah, it's lagging, but it gives me a good indication of how good I am or not, or I got to be better at this.
Well, right now, the pound seems to be having a hard time with the 75 line. I've got the 5-minute chart up, and we only have like 1 open and 2 closes above it, and we've got a couple of wicks that stopped there or went across and came back. So had anybody just shorted that 75, there was 2 or 3 pips to be had, even in the sea of green.
Right. Exactly. And that's the thing, exactly what I'm referring to, because if you're not, we're sitting in the sea of green, but the problem is that, at some point in time, it will change, and it's sort of like, you throw a ball up in the air, eventually it's got to come down, it just
Unless it has escape velocity, right?
Exactly. but the reality of what we see in the markets is what goes up comes down, and if you throw a ball up in the air and it goes up in the air and it comes down, it hits the ground, it's going to go up because it's going to rebound off that ground, and that's what the market does.
Yeah.
And so we just got to constantly be evaluating and reevaluating.
Yeah, and we've got that nice return bar there on M5, that big shoot up. So.
Yep. We certainly do. So it's gonna want to go down and check it. It got to about, I don't know, I'm guessing maybe. Let's see, actually I can measure that. It got to about a third of it, maybe a little bit less than a third of that. So I always like to go and say it's going to go and test at least half. And so in order to test half of it, it's got to get to, roughly, what is that? 25.62, roughly. So it's going to want to go down there. And what's interesting is to the left of that, you've got two wicks that got into that area, so it's kind of interesting. So there's lots of reasons why it's going to want to go down there and test that area. So that's a draw. That's a draw to go down there.
And here we go back to the 75, psychological.
Yep. I was telling you earlier, and I think I may have even mentioned this on the video yesterday, but for the last couple of days, that 60 line has been very, very strong line. 25.60 been a very, very strong line. And not the last couple of days. Yesterday was the day that was very strong. And it was interesting because even today, it carried some weight today before it finally broke above it. And it wouldn't surprise me that if it does break the 70, it'll go back down to it and test that 60 again. And that's just, what the market likes to do. And why does it do it? I don't know. I don't think anybody knows. I have suspicions as to why. And one of my suspicions is, the reason why why people want to get it back down there is because whatever reason people thought the market was either going to go short from there or it's going to go long from there. And so people got TP sitting down there. They got stop losses down there. So, and when I say people, I don't mean, retailers like us, but rather big institutions. They got enough money to dump into the market, to push the market in a particular direction. So let's say the banks want to get it back down to 60 so that they can get out of a bunch of trades. They'll go short here, just dump a lot of money into it and cause a short, cause it to a short run to the downside. And once it gets down there, they'll get out of their shorts that they put in here at 70, take some profit. When it gets down to 60, they get out of the trades over down there. They get out of break even or a small little loss, but overall they're winners. That's just how the market works. When you got literally hundreds of millions of dollars that you can go and dump into a particular move, then that's how you can go and manipulate. Sorry, I probably shouldn't say manipulate, but that's really what it is. The market into doing what you need it to do.
Yeah, I would tend to agree. I would tend to agree with that.
So, but that's now we were going to have what are we going to talk about today? And we said we'd make it a trading video. We're going to take a couple of trades. Well, unfortunately, we've been on the phone now. We're on the video now for 15 minutes, and if you notice, I have not called out a trade because I have not seen a trade I'd want to get into. There was a flip-flop box twice, but both of them just, I wouldn't take them, and so I didn't take them. They just didn't look good to me. We're stuck inside this range here, and it just, we're just stuck here. And the reason why I wouldn't take the trades is because the flip-flops occurred. And I said this to you earlier, TRO, that I like to take a trade on a flip-flop at the edge of a range. Well, the problem is this range is what? It's 9 pips wide. So it really, by the time you put in the candle that changes and the second candle that comes in after that, you've already chewed up half or more of what you're able to that would be available for you to go and pick up in terms of money. So it's not good for me. I want that range to be about 15 pips, and then there's enough room for me to make money.
Yeah, and you know what? The fastest 15 minutes in trading is just about over. So, fellow traders, sometimes 15 minutes will go by and there won't be a trade, and that's just part of trading because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.